Hello to everyone at Istanbul Fintech Week. Today we will talk about open banking and beyond through the startups perspective. I have two important guests today, Mr. Izzettin and Erhan. I will ask them to briefly introduce themselves and we'll start with Mr. Toksoy. Hello, my name is Izzettin Toksoy. I am the founding partner of Finso as well as the CEO. And we digitize loan processes and offer new sales channels to banks. And we're such a fintech initiative. Hello, İzzettin and Ahmet. My name is Erhan Zengin. Our product is called Paratik. As Paratik, we take many features of banks, for instance, transactions. We allow them to be managed through a single screen as an open banking platform. We also call this a cash management platform. In addition to account movements, we have many other products that we can list. If we have time, we can go into their details. And I'm in charge of cash management systems at Odea Bank. Open banking is a new concept, and this new idea, is it born out of regulations or is it imposed by them? How do you define from the first moment that we have started discussing this, both at fintechs and startups and the banking world, how do you position open banking, Izzettin? As you said, talking about Turkey specifically, it goes through regulations. Turkey, in this regard, is a bit behind. For that reason, there are some best practices in Europe which it has started taking as a model to make progress. Since the day we have started, we made a lot of progress, but when compared to other countries and the progress that they have made, we can say that we have still we should still gain some speed. But as an overall idea, with sanctions and regulations coming from the government side, it is paving the way for banks, for instance, and fintechs. For instance, as with banking as a service, digital banks the road has been paved for digital banks as well. And when they all come together, fintechs like ourselves, which support open banking, will start making progress. On the other hand, we are all at the start-finish level and we're waiting for the green light, because banks have started catching up with API services, and with services and regulations, the state has started eliminating uncertainties. And as fintechs, in order to work with banks or financial institutions in general, we are ready and waiting. So in the future, I believe it will be much more active, and regulations can make things easier for us, as long as they don't limit us in the way we use data. As long as they just set the limits, I believe it will contribute positively to us. Erhan Bey, what about you? I agree. Banks, it's always about supply and demand. As long as the industry demands it, we're talking about open banking now, but with cash management units, banks have been offering this for a long time. They were offering this to institutions, and with the new regulations, they will be able to open it a bit more. They'll be able to standardize its use, and they will offer it as a service to everyone. Open banking is about sharing of the data through the APIs that banks offer, so that third parties are able to develop financial services. And for that, new startups who have entered this, or banks or e-money institutions, companies which are involved in finance, will be making some development here. We will be making competition, but developing the industry together. As regulated more, in line with standards, we will all be complying with standards and trying to do better work. For that, regulation is important. That's how I can summarize the topic. As I said, we should not look at it as APIs, but rather as services. Banks have been opening services to institutions since the past, but by using them, we are able to offer different solutions to customers to tailor it for their experience. So fintechs like ours will become more significant. Thank you very much. You have all mentioned banks as we discussed open banking. Open innovation and API services. How do banks approach this, both in the past and present? Because I remember it was a process with many barriers. So with this perspective, the expectations, does it fit the expectations of the industry? Banking's perspective on open banking, is it at the level that you wish, that startups wish to see? I will start with Erhan this time. In fact, there is some resistance for sure, because banking is changing every day, and this will change as well. But this change is coming a bit faster, and banks want to probably position themselves the correct way. Services were available since the past, but they will be available in a more widespread way with digital banking and with the emergence of new regulations. With banking becoming more digital, the approach of banks to their customers will be changing as well. Even a small fintech, maybe it's early to talk about this yet, but in a few years' time, a small fintech will be able to compete against a big bank. Players in finance, including banks, do they want to remain in finance? If so, they will have to adapt to the new regulation and system. I bring it back to the same topic. It's about supply and demand. We produce solutions for needs, and as long as banks do the same in open banking or in other areas, we will continue offering benefits by creating similar solutions. Open banking is not only compulsory because of regulation or innovation, but it's the most important development that designs the future of banking. It has started reaching maturity all over the world, and we have started doing this, all of us, by doing our part, and with all the players in finance, we'll be developing this industry. What about you, Izzettin? To start from the other side, does it meet the needs of the industry? It doesn't. New steps are being taken, as I said before. For a year and a half and two, we have been contacting banks, and we see the development. Development has been delayed with regulations, referring to your previous question, because banks, when they don't know what will come out of it, they were not able to develop their API services. For instance, remote onboarding or other legal limitations. They needed more security and more clarity, and with that, banks were able to pick up speed. As we are a bit different than Erhan's area, because on the loan side, there is no generic API. Each bank is not included in PSD2. For that reason, banks have their own API methods that you have to work with, which means you have to integrate one by one with every bank, and you have to harmonize. But the development in this area is also inevitable. As previously said, yes, banks are a bit hesitant in terms of working with fintechs, yes, but I think techfins should be scared rather than fintechs, because techfins have not come to our country yet. Maybe after banking as a service, we can see this as a development, but I cannot say it's meeting 100%, but banks, especially with the vision of the bank and with its position and with the changing regulations paving the way for them, because there were limitations and logistical problems or barriers in gaining new customers. They had some barriers relating to their size. And as they're abolished, they can work with fintechs like us and increase the channels of their competition. So is in API, both in PSD2 and in our area, I believe they will make progress soon. I believe everything, it's an incubation process for them currently as well. You're correct. For 2.5 years, we have been discussing this a lot within the bank, especially income, in terms of income and application areas. There have been some deficiencies in the in the regulation, and PSD2 is a very important process that paves the way for us. Thanks to open banking practices, which players outside you have entered the system, including in banking as a service after regulations were formed, and how will these parties be adding value to the whole ecosystem? Because as Erhan Bey also mentioned, you are on a different side of open banking transactions on the loan side. The central bank is working with direct lending and account merging, and the central bank is working on a regulation on this. But in general, in all banks, more services will be open to the outside world, which will create competition or cooperation within competition. And with this, what could new players be, and how can they contribute to the system? İzzettin. As I said before, the industry is an ecosystem that feeds each other. When a development begins here with banks and with finance institutions, there will be other fintech on the regulation side, or on the fraud side, let's say, there can be new solutions. The most popular, there are 8 popular titles in Europe currently. I won't list them one by one, but Buy Now Pay Later has started in Turkey, Neobank, Challenger Bank. There are some institutions working on them, as we could see on newspapers, and maybe we can see in a couple years' time. I don't know how quickly they will be prepared. They will offer branch-free banking experience to Turkey. In addition to that, we are also centered in UK as well. There are some developments which we believe may come to Turkey as well, another arm of our country, through financial APIs. The security of those APIs, banks will open it to the interbank system, but some security problems or some responsibilities of fintechs in customer recruitment, when they work directly with fintech, some of the security issues that may arise, or some of the responsibilities of fintechs in recruiting customers. We don't take customers directly, but customer verification, fraud, money laundering, there will be many topics, and we believe there will be fintechs which regulate such issues. There is valuable data, and I believe in Turkey, it hasn't come out yet, but we believe it will be, because we're working on it as well. With banking data, you can profile customers and create very useful data. Maybe there will be customers which only use the data of fintech. Such companies will probably emerge soon. There are payment agents in Turkey which already exist, so there are fintechs which are already serving in those areas. But we believe the main turning point will be neobanks coming to Turkey, and maybe techfins, which I mentioned as a threat, because in the loan market, Turkey, there are, even under inflation, Turkey is people are able to borrow loans. So Turkey is a country of interest for them. So them coming to Turkey could be an area of interest. And in addition to that, as we said, we come from a number of steps. We have seen this movie before in other places of the world, so we're able to draw some insight from those places, and we believe that fraud and security side and interpreting data and make it sellable, such fintechs we believe will be more valuable for the Turkish market in the future. Thank you very much. Erhan, what do you think about this? Every institution that deals with accounting and finance will use open banking directly or indirectly. We can say the same for ourselves as well. For banks or institutions, this could be banks or accounting companies, we offer them APIs and cooperate with them and offer services to their customers. This is going to be what we do when this advances, because everybody has their own expertise, and we as a company will never replace a bank. We will not be an accounting company or front-end accounting But when they want to take services from us, since we're good, they will be able to take services from us and merge our data and offer unique services to their customers. And this is the only structure that can develop this system. This is also a joining of the forces as well. It's shifting from banks to fintechs because certain specialized needs have not been addressed before. We address all industries. For instance, all companies which work with multiple banks, we're able to offer solutions for them, but every time we tap, we see differences from industry to industry. We do customization to the extent we can, but for instance, in the future, a company may come and work only for tourism, and we can take different caps or APIs, and maybe they will do development specifically for them. This could be lending, scoring in the background. All these will increase and continue because these are all valuable data. For instance, when I leave home or leave office, Google is telling me how long it will take me to go back home. First it was scary, how does it know that I'm going home, but it then presents you with a set out of your habits. What we do for companies is, looking at their cash flow, we tell them that they will have a bottleneck in 6 months. We try and plan such things. Or if they need financing, we try to give them a warning. As we do these things, in the future, there will be AI organizations which do this better, and maybe if the company allows, we'll share data with them, and there will be better decision-making mechanisms so that we can offer more detailed or more clear data or better services to them. So banks, ERP accounting programs or CRM tools or e-commerce platforms in the background and money organizations, they'll either do these themselves or take support from companies like ours, but we will all try to offer a tailored customer experience to the customer. And we will be offering these things at a common denominator, and this includes banks as well. Thank you very much. I know Erhan, he's from the banking background. I know that he works with technology. And as you work with banks, what is specifically the most challenging thing that you find, Erhan? At first, was it giving your message, or was it presenting your service or opinion, or did they see you as a threat, or did they see you as a cooperation partner? And the services that you offer, banks have been offering it for many years through services, but through a single arm you are offering these services, and you have taken up some of the burden on the banks. So what do you think on this? Since 2018, we have been trying to give this message. At the beginning, we had challenges, but then a private bank, I won't mention the name, but a private bank, after spreading it a bit, our presentation became a bit more valuable, and then we started receiving feedback, receiving returns. At first, when we tried to convince banks, we didn't make much progress, but when a strong bank in the field triggered this change, the more banks started working with us. We also serve as white label and API. Convincing banks, of course, is a bit challenging, but once they see the change, it's very enjoyable to work with them, because inside, I can say this for every bank has a different customer portfolio that they focus on, and they want to create solutions for them. We work with public banks, private banks, and I have my own banking experience. And in the background, maybe they give accounting transaction history, but they do it in different ways. Customer experience, login, user habits are different. So we adapt depending on that. It's enjoyable to work with them once we enter, because I come from the technical background as well. So creating solutions for that makes me happy in the back end, but the convincing phase, as you know, is a bit challenging, and the reason for that is the people that we talk to sometimes know that this change is coming. They are from the industry, but Banking is a very corporate structure, as you know. There are many decision-making mechanisms and many things that they have to consider. For that reason, sometimes these areas are not usually prioritized. I know many banks that even if they have the budget, they cannot prioritize this within their own IT. So there are many decision mechanisms, so it's sometimes not easy to adapt and to move quickly. But working with banks requires know-how and it is very enjoyable. İzzettin, what about you? During your speech, you said you've seen this before on the global side of your company. When it comes to open banking, as regulations are being discussed, especially when it comes to payment services, these are usually prioritized, especially fintechs in Turkey, especially the ones which draw investment. The relevant law has an important impact. When it comes to loans, when do you think will this be implemented in Turkey according to your projections? Adding to what Erhan said, banks want to see first before they move so that they can minimize their risk. What we do specifically is that we don't have a specific competition, so there is no proof of concept yet. It has not been performed yet. So we have to convince banks to something that will be done, and within the process we have noticed that many banks' opinions on this has changed. The pandemic affected this as well. With the pandemic, the branch banking is shrinking all over the world, and in Turkey, according to the news that we heard from banks in 2022, number of branches will decrease as well. Banking will not die, but there will be fewer banks, fewer branches of banks, so maybe turning every point into a branch. Yes, banks are aware that it's turning into this, and they're entering this as well. There's also the factor that when I said we have seen this before, we are very interested in the UK market. The same has been experienced in the UK. Big banks, public banks, they act more slowly inside, but smaller banks or new banks, more challenger banks or neobanks are important for us because they want to gain customers, they target gaining customers, and with their entry, the water will be more muddy, and then we'll try to fish from there. The change on that side, it's changing in Turkey as we can observe, and abroad, people, it's changing. For instance, buy now, pay later for loans. It has had great success in the UK. In the US, it's a bit more difficult because the conversion of retail banks is very different between states. But according to a McKinsey report, a $10 billion revenue loss has occurred for banks. For that reason, especially for Gen Z, they are very lenient to technology. The cheapest, the quickest, the most convenient they want to reach, and for that reason, banks won't be able to have the same level of resistance, because if they do, there will be an alternative. For instance, buy now, pay laters are very common abroad, and in Turkey, buy now, pay laters are opening, or challenger banks are coming, so the barriers will be lifted apparently, and COVID has impacted this a lot. I mean, maybe we cannot say a positive aspect of COVID because people have lost lives, but because of the current level of COVID, people want to solve certain problems without having to go outside, which is, especially when it comes to loans, more independent of branches. As Erhan said, credit scores will not be so stagnant and based on a number of limited indicators, but there will be much more data to analyze, and banks will maybe access customers that they would otherwise never meet their whole lives. So that side will go much faster, we believe. PSD2, even if it's not within PSD2, banks, in line with their own vision, we see certain changes, and there are, especially in banks that are working with us. Thank you very much. open banking, let me ask both of you, how do you see the future of it in terms of challenges and opportunities, both locally and globally? In addition, I would like to ask İzzettin about my personal curiosity. In a place like Turkey where installment loan on the consumer loan side or installments for credit cards in such a market, buy now pay later, would it be as widespread in terms of volume as it is in some other places of the world? Because the numbers that you have just mentioned are destructive figures for banks. Starting with your second question, let me give you the following examples. We're working very closely with the MENA region. For instance, in India and Pakistan, the credit card is marketed as buy now, pay later. So the loan installment is now handled by startups with a certain Visa or MasterCard. They market this as buy now, pay later. Maybe it's a bit different, but what happens there is credit card limits are different there. For instance, the other credit card is used more in smaller shopping, and for larger credit cards may be used. So buy now, pay laters usually have smaller ticket sizes at the moment, 500 or 1,000 pounds in UK, but mortgage, second-hand cars, or health or school, such larger tickets are things that can max out your credit card, so customers use credits here. So yes, it creates certain cannibalism in the Turkish market. For the European market, the customer experience, you cannot convince a German, for instance, they don't use loans or credit cards, but in the UK it's very possible. For that reason, that's the target market that we've chosen for ourselves. In Greece, Spain, Italy, they are widespread. Latin America is very similar to us in terms of customer experience. They have an application called Creditas, so there is major potential in those places. And when we go east, India, for instance, is seeing a credit card as a buy now pay later system. So I believe there's potential for Turkey as well, because it's important to respond very quickly and it's competitive. For instance, recently we see that there's a gap between loans, maybe person to person self-funding Fintech will be offering loans. In that case, the commissions that banks charge will be abolished. So let that be the answer to the question. And for the first question, I have read a lot of SWOT analyses recently for Europe and US. What they see as an opportunity is seen as a threat by another bank, and it's vice versa in the other bank. So working together or cooperation and competition, they're not used to it. Is that really a threat or a solution? It doesn't seem like a solution now, but banks are pulling themselves back a bit. I think that's the threat for them, to pull themselves, to withdraw them, because that's how they will see them in the developing process. I think things have started now, and this can be stalled by certain institutions which want to pull themselves back. I think things will make progress. Our plus is that we are coming a bit back in Europe, and that way we can analyze and make better decisions for Turkey. For banks, there will be some resistance at first, but I believe we will meet at the common denominator for our aspect, because banking has many dynamics within, and in our country the finance industry is leading in many areas in terms of introducing technology or using technology. On the finance side, depending on the regulations, I don't believe you'll have problems with the technology, but on the finance side, as regulations become more clear, I believe we'll meet at a common denominator soon enough. The compliance, innovation, competition, there will be more advantages in these areas, and it will also increase the maturity levels of institutions. We say API maturity, but new business models or use case scenarios will be improved. And as I always say, these are about the needs of the customer, and a boutique tailored customer experience will be offered. So for investing financial institutions, it will be one of the players that shape the future of the industry. So currently, if the current players will remain in the industry, they will have to comply with the regulations. Thank you very much. This has been a very enjoyable chat, İzzettin and Erhan. Thank you to both of you. I enjoyed this a lot, and I wish you success in your future work.